How would you describe these results?
It's been a good quarter for us. We've hit a number of milestones. You know that we had given an indication that we could hit 10% return on tangible equity with flat revenues, and that's exactly what we did in Q2. So it's pleasing to see that we can actually hit that mark of double-digit return on tangible equity with a lot of upside from here. And the second one was for global market. After a very deep and long restructuring, we said that we were hoping to have a high single-digit return on capital, and we did 11%, which is more than we would have been given credit for, with equities up 3%, fixed income up 11%, which we believe is a market-leading performance. So overall, good profit, 1.3 billion, almost $1 billion of net income. That's the first time for us. So we're never completely happy, but it's good progress.
Does it mean that you can compete with the big American banks?
I think in our main businesses, main sales and trading businesses where we're generally measured, which is equities and fixed income, for the second quarter in a row, we come out around the top of the table. 3% in equities, 11% in fixed income. I think that that's a good performance compared to the US banks.
What's the environment like? It's still difficult.
It's very difficult. It's very difficult. Every quarter has been really mixed. First quarter you've seen. Second quarter started quite negatively in April and May with a very strong June. June for us was the best month in 42 months. So it's very contrasted because you can get in the same quarter the worst and the best month. So you also have to be nimble. I mean, part of our strategy has been to reduce our fixed cost very heavily, and I think we did that at the right time. If you take the GM restructuring, there's a lot of restructuring now going on. Our view from the start was that it was going to be a stagnant industry. So we had to take our costs down very severely. We took out more than $1 billion of cost in 3 years, took down the risk. So in a way, we're also lucky because we come out with that new platform just at the time when many others are restructuring, and we're benefiting from it.
What's the sentiment, but also competition like in the APAC region?
APAC has also been tough in terms of environment. We had a really good second quarter. Sequentially, profit is up 30% at 237 million. And if you look by business line, the private bank has done very well. We have 2.8 billion of NNA, which is very good. We countered the deleveraging that others saw. We created a number of products. One was a bundled leverage product that allowed us to, we did 1.3 billion of credit in the quarter when others saw deleveraging. And we have been very innovative because we saw this trend coming and we said we have to push the transaction revenue. Mm-hmm. So we took an ultra-high trading initiative to encourage our ultra-high net worth clients to trade more. And the average daily trading from PB clients has gone from 2 million per day to 2.2 million per day, so 11% up. So all that, everything is up, net interest income is up, transaction income is up, and recurring is up. I wish, but I'm always very cautious about the future. Asia is quite volatile. All the questions on the trade negotiations are weighing on sentiment. The wealth management side is doing well. IBCM is doing well for us. We're number one in Asia, and number one, Asia ex-Japan to be precise, and number one in China for the first time, which we're very pleased about. It's our 11th quarter above 200 million of revenue. So IBCM strong, our financing group, the lending, very strong, the private bank, very strong. It's the market side that's difficult because equities volumes are down 16%. Yeah. And those trends, unfortunately, have continued in July.
A number of your competitors in France and Germany have actually, done trading cuts. Does that mean that it's an opportunity for Credit Suisse, or does it, worry traders?
Look, we worked very hard to have an efficient, low-risk platform, which we believe is what we have now. So when we were under pressure at the end of last year to announce another restructuring, we said absolutely not. We're done with our restructuring, and we're now, in terms of timing, at a good. In the right time, in the right place at the right time, and able to pick up market share. We definitely have been picking up market share in equities now 4 quarters in a row, very significant market share, and same in fixed income. When the spreads went down, our securitized product business started doing better. So overall, really, again, good performance. 9.5 billion of NNA. Everybody was concerned about our NNA. 9.6 in Q1, 19 billion. We have our highest NNA ever in the first half at 59 billion. We increased assets by 110 billion. So it's on the core things, it's working.
And you'll be able to continue gain market share?
Well, we're working hard for that. That's depending on the clients, not just us. but we spend a lot of time with our clients. We've improved our prime business. For instance, in Asia, prime was up 30%. We've increased the balances in prime. We've improved the pricing. And we are also reshaping our AS platform, the automatic trading platform. We're getting share in high touch. So, and you can feel it. I mean, I was in New York 2 weeks ago. The morale is very high. It's completely different atmosphere than during the restructuring. And we also expected that post-restructuring, there would be a significant uplift.
And this is despite central banks. Is volatility back?
They don't make life easy for us. Particularly negative interest rates are a challenge. We have different answers to that. If you look at our revenue, we're actually quite pleased because the transaction revenue is up very strongly, and that has made up for the pressures on the net interest income, which we knew were coming. So I mentioned a few of the actions we took towards the end of Q1 to make sure that transaction revenue would go up in Q2. And if you take the case of Switzerland, where results have been strong, 20% return on capital in Switzerland. Sequentially, we're up on every line. We're up in net interest income, we're up in recurring, we're up in transaction income after a difficult first quarter. So you saw that we sold some real estate in Switzerland, which also makes sense because when interest rates are negative, investors look for yield, which drives up real asset prices, and tactically it's not a bad idea for us to dispose of some real estate, but that's not a long-term answer. The long-term answer is to really continue to work on the deposit side, and we are going to take some measures which will be detailed in August to change a little bit our pricing on that end and protect the net interest income. But fundamentally, negative interest rates are not good for banks, and ultimately we hope that that will be corrected. It's always been my worry about QE, that it was a good reaction to the crisis, but coming out of it is politically very challenging, and we're seeing that.
But do we need higher rates at the moment than you think is warranted for? Or given the uncertainty in the world economy, actually, it makes sense?
We think that negative rates have a number of negative consequences. One of them being that banks cannot make money. If banks cannot make money, they don't play their role in financing the economy, which is vital for growth. So my view has always been that the challenge, in particular for Europe, is structural reforms. It's actually a problem we don't have in Switzerland because the labor market is excellent. Unemployment is at 2%, population extremely well educated. But other countries need to move in that direction of making the deep structural reform, which only will lead to sustainable, healthy GDP growth. It's not negative interest rates, the answer.
What are you expecting with the trade concerns between the US and China?
Well, I hope that they'll get resolved because, I've always been a free trader and I've always been for trade. It's been a force of good for the world. So we hope that the two countries can reach an agreement. But to be honest, we plan always, we hope for the best and plan for the worst. So we are organized to continue to do reasonably well should such an agreement not be forthcoming.
What are your priorities for wealth management?
Oh, it's really supporting our clients. And that's really important to explain. My view of a client is that the client has an asset and a liability side. And it's very important as a bank that we serve both. And it's very tempting at different points of the cycle to just focus on one side. For instance, when markets are going up, everybody wants to be just a pure asset manager, forgetting that you can also lend. Clients have other needs, they have a retirement, maybe it's my background in insurance, but really I tend to take a holistic view, and that has really served us well. It's protected us when it gets tough, because you see that when you have a holistic relationship with the client, it sticks around. So we've seen in Q4 that our assets are more sticky than those of the competition, and we've seen now in Q2 that we can also do more things for the client. Okay? We can do an IPO, and we'll give examples in our presentation this morning. We can do capital markets, we can do asset management, we can help them leverage themselves, and being able to do all that is very, very important. So keeping that great trading platform that we have, and we talked about at the beginning, plus our coverage capabilities is very important.
Why did Iqbal Khan leave the bank?
He was leading IWM. It's a very good story. When I arrived, I decided to separate the onshore business in Switzerland, which is Swiss Universal Bank, and the offshore business, because I had the conviction that those were two completely different sectors, and that one was a potential huge growth engine, and I asked Isbal then to drive that, and he's done a very good job, and we wish him well. I mean, we have found a very good successor in Philippe Vedder, who was his CFO, who had appointed as his CFO, and who is very well known, knows the business in and out, so it's in the course of things.
Is there a region where you want to grow wealth management more?
Look, one thing I've always believed, but to grow in the end, you need a balanced strategy between mature and emerging markets. So that's a core characteristic of our strategy. The emphasis we put on Switzerland, which has been very good. We've grown assets in Switzerland at 5% in the first half, which for a mature market is something we find very satisfactory. So we've done very well in Switzerland, but also very focused on emerging markets. We've added 70 RMs in IWM that we just talked about, and that's the first time in 3 years, so we're growing 6% the distribution force, and we see opportunity everywhere. We were designated best bank in Latin America, best bank in the Middle East, best bank in Asia, and that's a situation we're comfortable with. The tough thing is now going to stay in that position.
Talk to me about the UK. Yeah. What does a no-deal Brexit look like for Credit Suisse?
Look, in the UK, we had already, as you know, reduced our footprint very significantly. We have about 50% fewer jobs than when I arrived. And we see the UK in our strategy as a very good platform for trading, and it's doing very well, actually. In that GM, global market performance this quarter, London did very well. I'm really pleased for teams in London. I went on the equities floor, which has been completely revamped. I reinvested, etc. It was a very different buzz. And we focus on the wealth management, which, of course, in London remains a big opportunity as long as it's a location for international ultra-high net worth individuals.
But are you preparing for a no-deal Brexit, maybe more than end of March?
Yes, of course. But maybe it's being an old firm gives us, as I said, we've been here since 1856, so we've been through quite a few changes in Europe in particular during that time. So we think that without any complacency, we think that we will be able to deal with this one new change.
Are you still planning to share some of the back office costs with UBS?
I think it's quite public now. For a long time, we used to say a Swiss partner. I think it's quite public, but we've been talking to UBS. Yes, the talks continue and have made good progress. Good progress
with, we have some kind of statement soon in a couple of months?
If and when we have something to announce, my colleague Pierre, Sergio, and myself will do so.
Tidjane Thiam, thank you so much for your time.
Thank you, Francine. It's a pleasure.